Hey, what's up, guys? It's Jonathan here. So, for those of you who follow the stock market, you probably heard about GameStop's 70% run up today in a matter of a couple hours. And you may be thinking to yourself, what the heck is going on here? So, in this video, I'm going to talk about GameStop and why it ran up so much in just one day. GameStop is a brick and mortar retail store that sells video games, video game consoles, video game accessories, and things of that nature. This company has really negatively been affected by the pandemic. And even before the pandemic, it was a struggling company anyways. So their stock price has been on the downwards trend. So you may be wondering, if a company is struggling this much, why did it shoot up 70% in one day? And here's the reason why. So what happens is that when companies are struggling like this, what people tend to like to do is they like to short the stock. And basically, when you short the stock, what you do is that you're borrowing shares of the stock and you're selling it at its current price today, and you're betting that in the future it'll be cheaper. And when that future time comes where you have to pay back the shares, your plan would be to buy the shares at a lower price and repay the share back to the shareholder. So GameStop, because of its struggles, is probably one of the most heavily shorted stocks on the stock market. About 132% of its shares are shorted. Because so many of their shares are shorted, what that can end up causing is something called a short squeeze. And basically what that is that's when a stock starts going up in price. So when that starts to happen, usually what short sellers will do is that they'll start to cut their losses and they'll start buying back shares at a higher price just to minimize their losses so they could pay back the shareholders. But inherently, by them buying more shares, it causes the price of the share to go up, which causes even more people to get squeezed out of their short positions and have to just realize it to cut their losses. So a short seller came out and said that they expect the price of GameStop stock to go down. And the reputation that this short seller has is that they're almost always wrong. Whatever they say is going to happen, usually the opposite tends to happen. So pretty much because of this, a lot of people thought, well, if they say that the stock price is going to go down, that really means it's going to end up going up. So what happens is that a lot of people will now try buy in before the stock starts to move up, due to this analysis said. And because of that, the prices started to go up pretty significantly. And pretty much what happened today is that this was the straw that broke the camel's back. So because the prices were going up, all the short sellers started to get nervous and they started to sell their short positions. This analysis was pushed all over multiple blogs and Reddit pages and whatnot. And that eventually caused the price to go up. As the price went up, short sellers started to repay their shares, which meant that they had to buy shares, which caused the price to go up more and more and more. And because the price went up so much in one day, it actually caused trading to be halted kind of around, I believe, 12:45 Eastern time. So barely even halfway through the trading day. So that's the lowdown of what happened with GameStop stock today. I hope that this video is a good lesson about shorts and short positions and how a short squeeze works. For me personally, I'll never buy a short, because the problem is with shorts is that your losses are infinite. There's no cap to how much money you could lose. Typically, when you buy a call option, which is when you bet that the stock price is going to go up, the most you could lose is how much that option costs, which you already pay upfront anyway, so it doesn't hurt as much. But when you short a stock, your losses can be infinite. So just be careful out there. If you're going to start using call options or you're going to start shorting any stocks, you can make a ton of money doing it, but you can get burned very quickly, like we saw today, and a lot of people probably did get burned. But guess what? The people who held the actual stock, and didn't short it, made quite a bit of money. So thank you for watching. If you enjoyed this video, please hit the like button. Also, if you like the way I explain things, please hit the subscribe button and notification bell so you get notified anytime I post a new video. While you're down there, also leave a comment if you have any questions about put options or shorts or anything that has to do with stock trading or personal finance. Follow me on Instagram, TikTok, and Twitter. I try to post there every day. And thank you for watching. Until next time.